Here we go. Hello, everyone. Welcome to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, man? How you doing?
Man, the Wall Street was ran down today. That's what I'm talking. It was a crazy day in the market. The Dow Jones Industrial fell average around 400 and 542 to 573 points. Like it went down. S&P also down 1.48%, losing about 93 to 101 points. The Nasdaq was down about 1.9% to almost 2.2%, losing 472 points. Like those drops was nasty. The Russell, man, Russell been getting hit like crazy. Small caps have not gotten a break at all, so they're still feeling pressure from the from rate not being cut and all that stuff. So we've seen a drop in that. So what drove the sell off? I mean, I think we talked about this a lot. Every time the job numbers come out, what do I always say? Somebody's playing with the numbers. Somebody is lying. I don't know who's lying, but
We we
somebody's
we we
lying.
we we've been talking about this for a couple of weeks. Like something's not adding up with the job numbers, right?
Yes,
We've been so
yes.
skeptical about how all these companies are firing people, but all of a sudden unemployment's down to 4.1%, and then the weekly jobs numbers keep getting beat.
Yeah, yeah, yeah.
I
Which is
mean,
which is crazy. I mean, if you guys seen the revision, I mean, the revision was nasty. So if you look at the revision, for example, let's say, um, disappointing. First of all, July numbers were disappointing. 73,000 jobs were added, right? That is way, way, way below expectation. And then revisions that was done for May and June, I mean, the revision was done by like 258,000 jobs. So we're down to like what, 15,000, maybe 14,000
you,
jobs that were added.
you talking about $250,000 miss. I mean, a quarter million people
Yeah.
on the revision. Like
Who was doing the calculation? That's what I want to know. Who was
So,
doing that
so the
calculation?
thing that I will probably say might have made things a little bit funny is you have these seasonality workers that are temporary.
Mm-hmm.
I think
Mm-hmm.
that might have skewed the data a little bit. And then when they started to dig deeper into the numbers, now don't get me wrong, revisions happen
All the
regularly.
time. Yep. It
They
happens all
happen
the
all the
time.
time. This is not
Yep.
something new. But when you make a revision that big for 2 months, yeah, that don't look too good. So for me, I think the seasonality thing might have played a picture because some businesses are like, okay, we have seasonal workers where we're hiring people for like a month or two or things like
Mm-hmm.
that. And that's probably might have worked. I don't know all the details. That's just my own personal speculation. But yeah. And
Yeah.
Mr. Trump was not happy with that.
He was not happy. He was not happy. I mean, if you guys look at the numbers, healthcare added 55,000 jobs, social assistance about 18,000, government, federal. I mean, we know this has been happening. They lost about 12,000 jobs. Construction was flat, manufacturing was flat. Retail, this makes sense. 8,000 to 10,000 jobs was lost.
Hmm.
Transportation and warehousing about 5,000. Hotels about flat, and then professional business service about 3,000 people lost their jobs. Now, the thing that's very interesting to me, the unemployment rate in different groups, right? Overall, we hit 4.2%. So
Yeah.
everybody is feeling it. Every
Yeah.
single
So
person is
we went
feeling
up
it.
by point 0.1. Yeah.
Yep, everybody's feeling it, right? But what was interesting to me is the Black or African American community lost about 6.9 to 6.7%.
Ooh,
Um, that's like that. It's highest right after teenagers.
wow.
Teenagers is about 12%. You know what I
Wow.
mean? So yeah. So
And
again,
I spend a lot of time on LinkedIn, and I can see the.
mhm,
I mean, there's a Reddit group about people looking for work, and you can go on Reddit and just listen to what people are saying out there. It's kind of Reddit. Reddit actually has you can get you tapped into what's kind of going
yep,
on in
yep,
certain parts of the world
yep, yep.
or
Just be
certain
careful
sectors
what
of the
group you
market.
join.
That's true. You gotta be careful.
You go end up on the other
but
side of the world.
but obviously, all of these APIs are probably reading all of the stuff that I'm watching on like Bloomberg
Yep,
and what I'm
yep,
talking
yep.
about. So I get a Reddit like email talking about go look at this community, bruh. People are hurting. You talking about people who've been looking for jobs for man, 12 months, 24 months,
Mm-hmm,
18
mm-hmm.
months, like, and it's every sector.
Yep.
So
Yep. Yep.
when I saw the revision today, I was like, we've been
We've
talking
been
about this
talking
the
about
whole
this.
time.
We've
It
been
didn't
talking
make any
about
sense.
this.
It didn't make any sense.
We've been talking about this.
Yeah.
So, in response to the disappointing July report numbers, President Trump ordered the immediate. I think she got fired.
I think she did.
The immediate firing of Erica. I think her name is Erica McIntyre or something like that.
Yeah, I can't.
She's the commissioner of the Bureau of Labor Statistics,
Yep.
and she was appointed by Biden, right? So politics aside, we have people who like served in different Republicans and all this stuff, and you have Democrat commissioners who serve under Republicans. You got Republicans commissioners who serve under Democrats. So it's like it's not political at all, but this is turning out to be a little bit political because Trump was like, "This is a
Yeah.
Biden person," so
He went on a little rant. He
he
went
went
on
in
a
a
little
whole
rant.
rant.
But this is the thing though. This is the thing that I will say is that it is clearly evident that President Donald Trump doesn't know how economics works
Mm-hmm.
because of this is
Or he playing dumb. I don't.
or
I
he's
don't.
playing. I don't
Yeah.
know which one it is because this is the thing. If the labor market is showing weakness, then that's going to move the Fed to cut rates.
Yeah. Yeah. So cutting rates is probably in the
Like,
books.
like
September? I don't
you
know.
want the Fed to cut rates, the job numbers come out that show more weakness. That is giving the Fed more incentive to cut. So let me just explain this in layman's terms.
Yes.
The Fed cuts rates to help stimulate the economy. That is the goal of cutting rates. Why? We live in a country that is driven by borrowing money.
Yep.
Period. The Fed borrows money, businesses borrow money, people like me and you borrow money to buy stuff, cars, homes, student loans, etc. When money becomes cheap to borrow because the Fed cuts rates, because again, credit cards,
Mm-hmm.
short-term loans,
Mm-hmm.
car loans are usually tied into the Fed funds rate. Banks offer cheaper loans. Now, you're not going to make that much money on your savings because rates are lower, right? Your savings rates will come down and all that stuff, but borrowing becomes cheaper. Because of that, there is more flowing of money throughout the economy.
Mm-hmm.
That is the whole purpose of cutting rates, is to stimulate the economy. Now, if we look at where now, let me be very clear. The stock market is not the economy per se, but the Fed has two mandates: full employment and stable prices.
Yep.
Inflation has come down significantly since they raised rates, which was what they were supposed to do, right? But they want to get it to a 2% long-term target. That is what
Mm-hmm.
they're trying to target.
Yep.
Full employment is considered 4%. That's the number that kind of shows you that full employment is good. Anything
Yep.
below 4% or better is or lower is good.
It's excellent. Yep.
We've been trending around 4%. So the Fed has no incentive to stimulate the economy.
Mm-hmm.
Now, inflation is starting to show. We got PCE yesterday. Inflation is starting to show up in places now.
Yep.
It's starting to show up. So the Fed has to be patient and not jump the gun.
Mm-hmm.
So rates, when you have one part of your mandate in good shape and another part of your mandate starting to get shaky, you have to play it real safe. Because if you
Facts.
get it wrong and you blow the whole thing up, things could get ugly.
Yep. Yep.
So
Yep.
Trump wants Jerome to cut rates. Now the job market is showing a little bit of weakness. This could be the incentive that the Fed needs to cut rates. But then you have a temper tantrum and say that the numbers are oh man.
But again, you can't go around firing crazy amount of federal workers. You can't go around like laying off people and all that stuff, and don't expect that to show up somehow in numbers. Like it's gonna show up. You know what I mean? Because you're not if you firing when you firing an agency or you closing down an agency, you might be closing one federal agency, but you don't know how many people that agency was was actually employing, right? So now you got to
Correct.
count those thousands of people under that agency, and then those numbers are going to show up somewhere. It needs to show up somewhere. It might not show up in a month. It might not. And we talked about this. It might not show up in 2 months, but it's going to show
Ex-
up.
exactly. And I know that President Clinton and Al Gore in the 90s, they did something very similar.
Yep.
But you have to understand that they did it at a time when the private sector was booming.
Booming.
It was booming at that time. The private sector is not necessarily booming right now. Like it's kind of like stagnant, you know? So I don't know. I mean, I I've never seen anything like this in my life. And when I
Yeah.
was watching it on TV, everybody was just kind of like, huh?
Yeah. We're, and plus, man, this is like a perfect storm too, right? So we're like, we talked about this. So we're in the age of AI,
Hmm.
right? A lot of manufacturing right now, they're transitioning their workers from, they're cutting costs by implementing AI. So it's like
Hmm.
you have all this automation and all this stuff. So it's like back in the day, probably during Al Gore and Clinton time, like you say, I mean, the private sector was hiring because people get fired. They need employees. They hire them, right? So it's like it was a cohesive environment. This day is not.
Yeah,
If you get fired from a high paying job, guess what? If they replace you, they're probably gonna replace you with some type of automation or give your job to somebody else or split it in multiple ways where somebody can take your jobs and stuff. You
exactly.
know what I mean? So it's like
And
there's no way you
every
can get back in there.
and every company that's invested in AI, eventually what they're looking to do is to reduce headcount.
That's it.
That's what
Because
they're
that's the
doing.
most expensive thing
They're
ever.
they're looking to reduce headcount.
Yeah.
That's why people have been saying that a lot of like skilled labor jobs, like electricians and construction and things like that, those folks not gonna get replaced by AI.
No.
Like if you have a trade job where you are very good with your hands, or you have a specialty in those things, you can't replace that.
Yep. Yep. Either
Can't.
that or get really good at working with machines and
Or
and,
getting
and
good,
AI.
or machine learning, data
Yep.
science, all
Yep.
that stuff. Because you see Mark Zuckerberg offering people
Yep.
a
Yep.
$100 million.
Get really,
So
really, really, really good at that.
yeah,
You
there's
know?
a shift in where people are looking to add headcount and reduce headcount.
Yep.
So
Yep.
you
Yep.
know,
Yep. Because even in healthcare where I work, our software literally can replace a whole department. Like it's crazy. Like it can replace a whole department. You know what I mean? So it's like typically when it's implemented, people start like, oh shoot, so we can save this amount of money without having actual people doing the work. So they do two things, right? They either like redistribute them to go work somewhere else or find some other stuff to do, or maybe like they had like other things that was in the pipeline to start moving people around. But
exactly.
honestly, like it's happening and it's happening now. So you really have to get good with like either machine learning or go get you a skill job
Yeah.
that it's probably gonna take another 50 years before AI starts jumping in because they're coming. They come for everybody's job. I'm gonna let you guys know, like whether you're electrician or in construction, it's gonna come for your job one day. But for now, that's not the focus. But it is crazy, man. It is crazy what's going on out here. But overall, um, looking at how things kind of like showed up today, I'm not sure what's gonna happen next week. I'm not sure what's gonna happen going into September. You know
Yeah,
what I
see,
mean?
yeah, that's what I said. I was looking at swinging some puts to next week, but I was just like, let me just
But
chill.
I don't know, man. I don't know. But it's I mean, those drops today, like if you missed it, like I did, I mean, I stayed away. I was like, I don't know what's happening, but I'm gonna just chill here because yeah, I ain't gonna
So
try nothing.
this is how I kind of know sometimes when to pivot from being bullish to being bearish. So the algorithm that I built, usually on a normal trading day, right? It'll pick up, I'd say anywhere between when I look at the three time frames I look at, I'd say pick up anywhere between 15 to 20 names that I got to comb through one by one.
Mm-hmm.
When that list starts getting shorter and shorter,
Some.
I know something's up. And then I start looking at the VIX because I know the algorithm is way better when the VIX is under a certain level.
Yep, the VIX went up today.
The VIX was up like what, 20%?
Yep, VIX is
So
up
when I
today.
saw that list getting shorter and shorter, I got online last night. I was like, yeah, I see too many bearish setups going into tomorrow. I don't want to pass judgment because again, if the job numbers comes out good, market, could
Yeah,
pop. So I was like, let me not pass judgment. But then when we woke up this morning, the market had already sold off after that job number came out.
Yep.
So,
Yep.
um,
And one thing I noticed every time we have job numbers on Friday, it's usually not a good idea. It's usually not a good day for the market. Like every time, it's not a good day for the market, which is weird, but it is what it is. But let's move on, man. We saw some crazy moves today from some stocks. One of the biggest ones that we saw, actually, Amazon. Have you guys seen Amazon? Amazon dropped 8% today, despite strong earnings. But it dropped due to soft operating income guidance, particularly from the cloud services, which I was shocked. Like, why
and
is that
some,
not doing good?
yeah, somebody was asking the same question. It's like, but when you look at the cloud providers, it's like, okay, when you look at what Microsoft put up and their blowout numbers, then that
Mm-hmm.
tells you that somebody's losing.
Yeah,
Like
it looks like
somebody's losing.
Amazon
And it
is.
look at like it's Amazon. So, and people will look at the numbers. Like, let me be honest with you. The numbers aren't bad. Like
Right.
the numbers aren't bad. Like I went through the numbers. You got revenue growth of 13% year over year, right? You have profit and EPS growth with beat consensus 1.68% EPS compared to 1.33. The problem is AWS performance. And this is what I'm going to tell you. When investors, when they look at Amazon, they don't care about the freaking retail store. That's a low margin business. They're looking at Amazon Web Services. That is
Yep.
what they are. And if I'm not mistaken, the current CEO is not where he came from.
Yep.
The AWS department.
Mm-hmm.
So that's where they're trying to really grow their business because the margins are a lot better in that business.
And it's
And
B2B in that area. So it's like
and
they
it's
know,
B2B,
yeah, yeah.
correct. So
That's what the money is.
when that's lagging, that's when, investors are just kind of like they don't care about the Amazon retail store. Like no one cares about that. No one cares. I would say no one cares. Investors don't care about that.
Right.
They care about AWS and the growth of AWS.
Yep. 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 The other one
So
that dropped was Apple. Apple dropped about 2.5% with executive warning of about $1.1 billion in tariff related costs amid strong revenue growth.
I
I
had
mean,
no I had no
that's
idea
crazy.
why it was up at 217 in after hours yesterday.
Nope.
When I heard that, I was like, huh? That didn't make no
Yeah, it don't
sense.
make no sense. And
Don't
then
make
and the whole emoji thing, man. I know we were disappointed, but like, why are we talking about emoji, yo? It's like I am
That's
convinced.
their innovation. It's the
Oh,
emojis. Oh God.
I am convinced that Apple is working on something
And they just keeping it on the hush.
and they're keeping it on the hush. Like like this just seemed too. It's like you're not on the same page as the world. Like you know what I mean? You're releasing phones, cameras, you're releasing new PCs, and then now you're talking about emojis improvement and crap. Like, dude, like some is up. I'm
I,
telling you right now, Apple is working on something.
I hope so. We'll see, man.
No,
We'll see. We'll see. I'm not sold. I'm not sold. But
they're
again,
probably they're probably trying to pull that art of war thing. You know what I mean?
ah,
Let your enemy think that you have lost or you too far, and then
that's
bam, he
true.
pops up in front of him. You're like right there. You know what I mean? So I'm
Yeah,
telling you, man, they're working on something. You heard it here first.
we'll see.
Working on something.
Billy always seems to have the inside scoop on something, so I'm not even gonna argue against him. So
I don't know,
he
man.
been talking about that jobs number being funny for the last couple of
Bro,
months, and Lord behold, what do we get
bro.
on
That
Friday?
that thing did not make any sense to me. I should have bought a bunch of puts on there, but I did it. But it didn't make any sense to me. Microsoft also dropped by 1.8%, hitting record highs early in the week on strong earnings. So they drop a little bit. Coinbase and
Ooh,
MicroStrategy
ooh,
both
ooh,
dropped.
ooh.
Like if you guys go see that drop, that was a nasty drop. I mean, Coinbase was down like almost 17% sometimes during the day. MicroStrategy was down like 8%, even though they had gains based on their Bitcoin holdings. I mean, if you think about it, people are taking profit. Like, you know what I mean? People are taking profit. It's a lot of those times, like a lot of people just hey, it's time to take profits. Let the bag holders stay in there and then we just take our profits and stuff. So yeah.
Yeah, Coinbase got absolutely smacked.
Yeah, he got smacked pretty bad, man.
16%. Ooh.
Crazy. And on the contrary, go look at the Reddit. I know we talked a little bit of Reddit. Go look at Reddit. Go look at Reddit's chart. He was the lone soldier out there today with I think Rocket also went up today too. Rocket Mortgage, I think, was up there also.
Man,
But
what's crazy is I wanted to short Reddit after the IPO, but man, I'm glad I didn't do
no,
that. I'm glad I didn't do that.
that thing's still moving, man. Still moving. It's crazy.
And you know what's crazy to me is from a business standpoint, as far as a public company is concerned, Reddit has figured out how to play in the same space as Meta because they basically do the same thing. It's a social platform
Uh-huh.
where you have advertising as your main source of revenue. Snapchat hasn't been able to figure it out long term. Twitter definitely hasn't been able to figure it out long term. And I'm just like, what is Reddit doing that Snapchat and Twitter can't? I mean,
Reddit is just a big board for everything.
that's
Like
true. Yeah, that's true.
if you want any topic you want to talk about, go to Reddit, and
Any
it is pretty
topic.
and it's pretty organized. I like that. It's like it's pretty organized. So as long as you
Mm,
put that R, whatever you're looking for, you will find the topic you look for.
yeah, you
And
find it.
the one thing I like about it is like people are brutally honest on Reddit.
Oh
Like,
yeah, they don't be lying because their identity is hidden. They don't have to show you who they
right?
are. Hey, sometimes I be already be saying some stuff too. I ain't gonna lie.
Let me find out you like user number one
I ain't
two
gonna
three four ghost.
I ain't gonna lie. I've said some stuff on Reddit. Nothing bad, but just talking about previous experiences with people.
Yeah. And I think that's probably they have some really good user base because
That's
hey,
probably yeah.
you get to be out there, you get to be free and say whatever you want, and nobody's gonna be like, oh, you this person or whatever.
Exactly. Like on Twitter, you get judged real quick or
Yeah,
you get canceled.
yeah, pretty quick,
Can't get
pretty
canceled on
quick.
Reddit.
Yep. Well, I hope Ray doesn't turn out to be like that app. I don't know if you guys heard about that T app. I think it's Spill the Tea, whatever app
Oh, I haven't
that
heard
got
about that one.
hacked.
Oh,
So that app got hacked.
oh
So
man.
it turns out that they promise their user base that they are anonymous and everything is secure. So basically, the T app is like, I think it's an app where women go in there and rate like different men and talk about like
Oh, wow.
how they are in
Okay.
terms of dating and all this. So they literally just get to like, I guess, bash a couple of men in there and just share their opinions about them, what is to dating, what it's to getting to know them, whatever. But the company lied to the users and said that their data was safe, but they were hosting their data in an unsecured location. And somebody was able to hack in there and they grabbed the whole data of everybody, pictures, addresses, comments, everything. And they released that thing online. I
Wow.
can guarantee you it was probably one of the men they badged on there.
Dang. I
Oh.
hope I'm not on there.
Uh, hey, if you're in the streets, you probably are.
I
But
stay away.
yeah, man,
I stay away from the streets, man.
they
Ain't nothing
grab
out there.
they grab everybody's data. So you have all these women's data just out there right now. So
That's
literally,
crazy.
and the crazy thing is they actually put like geolocations on the map where the users are. It's nuts, bro.
Ooh.
Whoever did this was intentional about it. You know
Who
what I mean?
hurt you is who I wanna ask that person. Who hurt you?
Somebody did.
Dang,
I
that
don't know,
sucks.
man. Maybe he found his profile on there and somebody was talking about him. But yeah,
Yeah. I gotta
that's
look I gotta look more into Reddit as a business because I haven't really I just
yeah,
I just assume that anybody who wants to play in the same sandbox with Meta is gonna get smoked because everybody else has tried to has.
yep, yep,
But
yep.
surprisingly, Reddit has figured something out. Uh-huh.
They're holding their own. They're holding their own. So
Impressive.
what's new? Trump signed an executive order on July 31st imposing a new structure on reciprocal tariff on 69 trading partners. So for example, Canada is getting 35%, and get this, Brazil is getting 50% tariff. If you like your coffee, you better get ready to shell out some good.
Yeah, a lot of coffee beans come from, man. I was talking to a good friend of mine, older friend, who, likes to drink coffee. And he was like, man, I stopped going to Pete's and Starbucks and just start going to Burger King because they raise their prices.
Burger King probably gonna raise their prices too. So
Yeah. So and I told him, I was like, when you go to Pete's and Starbucks, they incorporate their brand cost
yep,
into that cost.
yep, yep,
And I was just like, man, that's why man, that's crazy.
yep. I used to
And
be
I'm
a bougie coffee drinker. This year, I have seen some increase on that. I stopped drinking coffee because I was like, I'm not paying no $20 because I like to get the beans, the actual beans, and I
no.
and I have the crusher at home, so I make it like crush it real nice and
Okay.
make my own thing. And so I was like, nope, I'm done.
Dang.
Forget coffee. Too
Dang,
expensive.
boy. What's
But
that? What's that green stuff people be drinking? Matcha?
oh, matcha. Yeah, that's like grass. So it was like it's like a
Okay.
powdery grass or whatever.
Okay. That's like the new hype thing I've seen
Yeah,
lately.
it's overrated. Tastes like dirt to me, but it is what
Oh,
it
okay.
is. India, 25%. Taiwan got 20%. Switzerland. I'm like, what the heck? What? Switzerland? What do we get from Switzerland? 39% tariffs on them. That's crazy. Now, Canada, I think their rate jumps from 35 to something else. But for them, I kind of understand, right? It's like a lot of fentanyl, a lot of drugs kind of get trafficked through Canada. So I think the US is kind of like, especially even Mexico too. Like I think the US is kind of like play like, hey, either you guys control this or you guys are gonna get tariffs. So
Yeah.
we'll see. We'll see what happens with that one. But overall, man, like the sell off today, I think it was just a combination of so many different things. So we had the tariffs, we have the job numbers, and then we just have uncertainty overall in the economy and all this stuff. So it was pretty
Yeah.
interesting.
Someone mentioned what do we get from Switzerland? Swiss watches.
Do we really import that
Thank
many Swiss watches?
I don't know. Thank you, Shane. But yeah, that is true. Swiss watches. Watches do come from Switzerland.
um,
But I don't know. I mean, just based on sheer, I guess, just the way that this whole trading issue is going,
mhm,
to me it seems very one-sided, right? And I don't know if it's gonna backfire or some countries are just gonna be like, you know what, forget you, we don't care.
mhm.
But I don't know. Lately, I've been because of all these tariff stuff. Lately, when I buy stuff, I be looking at where it's made now. I be looking at the label, like
Yep,
where this come from?
yep. It really makes you pay attention now, like
Yeah.
a lot more. But
So
but I mean, I honestly think we're gonna start seeing a lot more price increase. I think it's gonna shock some people. I really think so.
yeah,
Because
businesses are eating it right now, but
yeah,
not forever.
yeah, I think it's gonna shock some people. Like if you go to grocery stores or whatever, I think this is gonna be. It looks like the tariff. I thought Trump was gonna extend the thing today. I think a lot of people thought he's gonna extend it, but he's like, nope, we're going through with it. So we'll see what happens in the next couple of months. We'll see what happens by September. See what the numbers looks like. So it's gonna be interesting.
And it'll be crazy because we don't get a Fed meeting until September. We don't have one in August, right?
Yep. Yep.
If we get a PCE print or a CPI print where inflation moves higher, to me, you can take that September rate cut off the table. Especially if let's just say unemployment stays at 4.14, let's just say it stays at 4.2, maybe even
Mm-hmm.
4.3. I don't know if Jerome is going to be like, I'm going to cut now because
You really think Jerome is gonna cut before he leaves? I think Jerome is holding off till he leaves. Honestly,
you think so?
I don't know. I don't know if he wants to even cut. I think he's just holding off.
Hmm.
Unless if something really drastically happened, I really don't see
Yeah,
Jerome
see, that's
cutting.
what I'm saying. If we get a labor market that shows extreme, I wouldn't say extreme, but we see, I'd say 4.5, 4.6, we'll get
Yeah,
a cut. I
he's gonna
think we'll
force.
see
He's
that.
gonna
Yeah.
force him. He's gonna
Yeah.
force him. Yeah.
But I think the way PCE is trending now, that makes him a little bit more gun shy.
Hmm.
So
Well, we'll see. We'll see what happens after that, man. Figma IPO today. Was it today or yesterday? The IPO yesterday.
yesterday,
I mean, they started what $33.
the
That
IPO
thing
price was
ran
33.
up like crazy.
Yeah, I got a friend that works at Figma. They were supposed to get bought out by Adobe a couple years ago at a $20 billion valuation, and that fell through. That might have been the best thing that ever happened to them because now they're worth like what 50 something billion.
Yep, yep. Man, they hit a high of like $142 today before they pulled back to 122.
Yeah.
Man.
The thing that I've noticed is when you go public and you're profitable, investors like that.
Mm-hmm.
Investors like
Mm-hmm.
that, and Figma is profitable. So they play in the same sandbox, I think, with like Adobe and a couple of like design platforms
Yep.
and things like that. So
Yep.
um, yeah, but that IPO, I mean, you could have bought at 90 and sold it like 140 and been completely
And
happy.
you still make money. You still make money.
You would
That's
have still made money.
crazy.
So
Wow. So they
Yeah,
valued at around 47 to 60 billion dollars now.
yeah,
That's not bad. Shoot.
yeah. Especially when somebody was going to buy you out for around like 20. I mean,
Yep.
that's
Yep.
that's that's not a bad way to raise. Now, I will say this though. So what happens? This is what you have to also understand. So when you IPO at a certain price, right? So basically, you have a certain number of shares that
Mhm.
you give to the market, and you price it $33. They probably sold themselves short. They could have priced that IPO at like
A lot
50 or
higher.
60 and raised
Yeah.
way more money.
Yep.
But I
Yep.
also understand that sometimes if you price it too high, you may not be able to get the same type of pop that you get on the secondary
Yep.
market. But yeah, Figma, whoo, what
Yeah.
a huge move.
That's crazy. They raised about 1.2 billion just from this. In 2 days, that's not bad.
Man,
Shoot.
that's not bad.
That is crazy. All right,
So,
well, let's look into next week economic calendar. We have Friday, I mean, that was today. Um, we have next week trade balance is coming up on in the June trade balance, and then we have personal income and outlets GDP revised, Jackson Hole symposium. I mean, there's not a lot of stuff coming out next week, honestly. So we'll
oh,
keep an eye
Jackson
on
Hole's next week.
Jackson Hole. No, August 21st to the 23rd.
Okay. Ooh, I'm about to say that came quick. Yeah, Jackson Hole is kind of like the de facto Fed meeting.
Yep.
It's not an official Fed meeting, but it's a Fed meeting.
Yep.
And
Yep.
I don't know if everybody remembers when Jerome got on that one Jackson Hole meeting. He was like, expect pain, and the market just went.
Yep. Yep.
Yeah,
But yeah, next week there's not a lot of stuff going on. Like Canada employment report is coming up. I don't know if you care about that one.
no.
Yeah, there's not a lot
We
of
got the weekly jobless claims every Thursday. You know
yeah,
that can be a market mover or just smoke in the air.
yeah. But beyond that, August 12th, CPI, August 14th, PPI. So we'll keep an eye on those. Those
Yeah,
are coming out
those are the
also.
things that matter. Those are the
Yeah.
things that matter. Yep.
But overall, man, this week has been a zigzag because we seen tech tech kind of drove the market up, and then Friday everything just came crashing. So it's like
Correct.
it's been a crazy week of zigzags.
And I'll be honest, I think at the pace we were moving, right, there needed to be some reset, repricing, flush the bag holders out, flush the bad money out. I think that this was somewhat warranted.
Yep.
Now, a 21% move in the VIX is a little bit extreme. I'll be 100% honest. It's a little bit
Mm-hmm.
extreme. So, but I think this was overdue. This was overdue. It's
Oh yeah.
too many stocks just making ridiculous moves. Like you go
Yep.
look at like the Jobies and the Archer Aviations that like doubled in like 2 weeks. Like, stuff like that. When you see stuff like that, you kind of just say, okay, press the pause button. Let's
Mm-hmm.
reset. Now, I will say this. I don't expect this to be a extended sell-off, right? Like something that like we saw like in March, April. I'm not expecting that, but we could see weakness in the markets over the next couple of trading days. I mean, that
Yep.
to me that would not be surprising.
Yep.
But let me leave you with this secret or tip about how to spot a significant market downturn before it happens. So let me put y'all up on game.
Mm-hmm.
So download the Fred app. This is a economic indicator app that a lot of financial professionals use. Download the Fred app. There are three um, types of indicators that you can look at that will give you somewhat of a signal saying that things are about to get ugly. Look at the ICE B of A Triple B US Corporate Index Option Adjusted Spread. That's one you can look at. Or you look at the ICE B of A US Corporate Index Options Adjusted Spread. So not necessarily Triple B, but just corporates versus US Treasury. So that's basically what it looks at. The first one I mentioned looks at triple B's um, versus treasuries. And then there's another one called ICE B of A US High Yield Index Options Adjusted Spread. Those three you can look at. So Whenever you see that the spreads or that chart is trending higher, that is a signal that there's weakness in the market, because this is the bond market speaking. We're not looking at the stocks. I've always said this. The bond market is a better indicator of the economy than the stock market.
Yep.
When you see those spreads moving higher gradually, that is a signal that things are getting weaker. So I'm going to give you 2 time frames to look at that you can see that this is pretty accurate. Look at the most recent data from Liberation Day, right? Look at the market from January, I'd say January, February 2025 up to April 2025. You'll see that those spreads were starting to creep up. Another time frame you can look at right before COVID. So look at February 2020 all the way through March 2020. You'll see that the trend was also starting to move higher. Look at what happened during the financial crisis in 2008. You'll see the same thing. And I think there was one more time frame that I want you to look at. And I just need to go back and see when this was. All right, 1 second. Oh, I don't want to look at Reddit. I want to look at SPY. Yeah, go look at the back half of 2022 of about 3 years ago, and you'll see the same thing. So anytime a significant market downturn is usually in play, you're going to smell it in the bond market, usually. And what happens is the spread between corporates and treasuries starts to widen. And then the spreads between high yield and treasuries starts to widen. Once you start to see a trend of that happening, that's your signal. Thank me later.
And that's a lesson for y'all.
There you go.
That's really good. That's
So
really good.
if you ever want to, something happens in the market and you want to see, should I be worried or should I just chill? Download the Fred app, look at those 3 indicators, and that will tell you what you need to know. So you're welcome.
Now,
That's my secret for the week.
yep. So now you said the Fred app in the App Store, right? Fred app, basically.
Yeah, so it's this app. It looks like this. And those are
Yep.
the indicators. Yeah.
All right.
So those 3, download them, download that app, have it in your phone, and then just check those 3 indicators. And as you see that graph start to tick up higher and higher and higher and higher, again, you want to see a trend. That's your signal that there is weakness in the market.
Something's happening. Yeah.
Something's happening. Yep. So look at those 3 time frames. Are those, I gave you 4: COVID, Liberation Day, financial crisis, and the back half of 2022. You go look at the trend of what happened before the stock market sold off, you'll see that the bond market was signaling something. So now today, yields actually went down. So that kind of tells me that this sell-off is not something that I would be overly panicked about, at least for now. So again, I think that this is something that was needed at some point, because every once in a while you need a reminder that stocks actually go down every once in a while.
Yeah.
So
Yeah. But overall, man, like we talked about this all the time, right? Sell off in the market usually translate to opportunities coming up.
correct. Exactly.
It's time again to start positioning yourself for when the market comes back up again. So, because it's going to come back up again. So it's like now it's just time to again, apply those strategy again, find the ones that you were trying to get when it was too high. Maybe it's time to start looking at them again. Wale always says this, don't put everything in there, gradually work yourself in, maybe 5%, 2% here, 3% here, but don't put all everything, because you never know how far the sell-off is going to go. But
correct.
Again, there's a lot of opportunities that happen today. I'm looking at a lot of stocks, man. I was like, this was a good opportunity for people who might have missed some trades from back.
And I'll say this: I was looking at Intel. Intel's below $20 now. Again,
Yep.
it's below $20.
Yep.
And I'm not saying go out there and buy all of Intel, but if you have the patience and you're willing to wait this out, over the next couple of years, not months. I'm
Not
talking about
months.
years.
Yep.
Um, it's to me, it's a name that could eventually, actually, dang, Intel got down to 1897. Did my order execute? Is No, it
Yeah.
didn't.
Yeah.
I put 1850. Ooh, dang it. Anyway, but Intel's under $20. Another name that got smacked over the last couple of days that I still like long term is Palo Alto Networks.
Altitude. Yep.
Palo Alto Networks is down from 210 all the way down to 168.36 today, and it kind of bounced, but they dropped because they made that acquisition recently. So, yeah, I mean, anytime you have days like this is when you want to start creating a list of names that you want to be in and be a part of, and
Yep.
start to really, again, do your homework. And again, remember, you got to buy good businesses. Don't buy broken, you know, buy
By
broken stocks, not
not broken
broken
business.
companies, not
Yep.
broken businesses. There you go.
Yep. Yep. That's the bar right there.
Yeah, buy broken stocks. Don't buy broken businesses.
Yep.
So, yeah, we'll see how this shakes out. But I will, again, I will take the some optimism in this, because, like, again, I always look at these sell-offs as potential opportunity. And if you're looking for a group that will walk you through the process
Hmm.
about how to navigate the treacherous waters of the stock market, I mean, this is the stuff that we discuss
Over and over and
every
over.
single day,
Yep.
every single day. So, um, I would say that you don't have to do this alone. And the algorithm that we use for our trades, I'll be honest with you. I mean, I'll be, I mean, the hit percentage, it's close to 90% as of
Hmm.
the last couple of weeks. I mean, you go
Yep.
look at the chart of Apple today. We caught a move from Apple from 210 to like 201. So,
Yep.
um,
Yep. Yep.
yeah,
That was a nice
we've,
drop.
yeah, the algorithm has really made our trading really, really proficient. But we'll see what happens over the next couple of weeks and see how the market reacts. But I would not be surprised if there are certain stocks and names that bounce pretty significantly next week.
Yep.
Because one name that was down today that actually recovered pretty nicely was Tesla.
Yeah. Tesla hit that 200 and he
200,
kept, yep. And he kept
and it
bouncing on there.
and it bounced. So
Hmm.
that's a name that I will be watching. Another name that I was also looking at going into next week was Uber, but I didn't want to jump the gun. But
Surprisingly, IWM also bounced with 200 EMA.
interesting,
Hmm.
interesting. But yeah, I'm looking at Uber next week. Um, if it can hold this 86.90 level, I kind of like how it closed. But I am a little bit nervous about just the overall market in general. But I like how it closed. I'll have my eye on that. So if
Yep.
you don't take anything from today's show, there's one trade idea.
Yep. But overall, opportunities have opened up today. I hope you guys take advantage of it. With that being said, that's a wrap for today's episode, the Wall Street Rundown. We covered a lot today, man, from sharp market pullback, Trump's talking about tariffs, July job shocker, and then we also talked a little bit about the Figma explosive IPO. We talked a lot about some opportunities that might be in the market. But overall, man, as always, we always say to stay informed, stay focused, and the best thing you can do is don't trade or invest without a plan. Is why they say do not buy broken businesses, buy broken stocks. And with that being said, we'll be back next time. I'm your co-host Billy. I have Wale with me. Thank you for
Yeah.
tuning in. And
Yeah.
please, guys,
Next.
don't forget to subscribe, share the show, and leave a review. Also, please,
Yeah.
please.
And also Wednesday, we're going to be doing a deep analysis of another stock.
Yep.
So I have not picked which one we're going to go through, but I did have a list that I went through last show. So
Yep.
I'll pick it at random, and then we'll do a deep dive on one of those names going every single Wednesday.
All right. All right, y'all. Have a good weekend. Stay safe, and we'll catch you on the next rundown.
All right. Take
Peace.
care, everyone.
All righty.